Pablo, good to see you. How you doing? How you been? First one in. JP, good to see you all evening. How you doing? How's everyone's weekend? Welcome back, Miles. Good to see you, Autistic. How you been? It is good to be back. Thank you so much. Good day, Miles. Mike, good to see you as well. How you doing? Stormy, good to see you as well. How you doing? How you been? It's great to be back, honestly. I missed the live shows quite a lot, actually. As I always do when I go, essentially, on any sort of vacations or work-related vacations. Hope you had a great weekend. I did. It was very restful, the whole family vacation. Even though I was a crypto peeps, good to see you as well, Santa. How you doing? Good evening, Miles and CMF. Good to see you all, Free and Forever. How you doing? Hello, Miles. Good to see you back, brother. Good to see you all, T. How you doing? Great. I spent the weekend in the countryside. I did enjoy it quite a lot, though, spending the weekend in the countryside. The highlight for me would have been essentially, one of the highlights for me was going to Jeremy's, essentially, pub. The farmer's dog is called. One of the highlights, definitely, because I grew up watching essentially the Top Gear and then the Ground Tour. Good evening, Professor Miles. Good to see you all, Funky. How you doing? You look fully recharged. Let's go, Funky, brother. Well, I am. I'll be honest. I've got a cup of water, as always I do, and a cup of coffee. Okay, so good evening, Miles. Sorry I missed yesterday, but looked forward to a great evening tonight. I didn't know problem. I wasn't live yesterday. Honestly, going forward today, obviously we're going to be, going live as usual, Monday to Friday, 10 p.m. Long time onwards. Good evening, Miles. How are you doing? I'm doing great, Kelly. Good to see you as well. Hi, Miles. Why always crypto dump? Johnny, good to see you as well. And good to know that your questions are always the exact same as it is on every live show. Johnny, it's because of many reasons. One of them being the essentially loom of, are we going through some sort of AI bubble burst? That's weighing in on the market space. Also on the side of regulations, being so close to regulations, a little bit of manipulation is justified. There's many reasons, Johnny, but always look on the upside, which is going to 2026. A lot of things are going to be happening. Hi, Miles, the CMF. Good to see you all, Covetous. How you been? Now, let's do the intro disclaimer, what we're going to talk about on tonight's live show. And yeah, let's start off the live show. And then by that time, everyone should be tuned in for the first part. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Pretty much all the information you should know about regarding essentially the world transforming into a digital space. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And also, we do Q&As in this live as well, which means if you do have any questions, put it down in the comment section. More than happy to help you out. Now, a lot of news to go through on tonight's live. We're going to go through all of them. We're going to be talking about essentially the AI bubble fears that are still looming inside the market space, pushing the market on the downside. We're going to be talking about essentially some Trump news that's going to be apparently coming out, what kind of impact that could possibly have on essentially the crypto market space. We're going to talk about the US essentially pay forms that just came out as well, the non-pay forms essentially. We're also going to be talking about some partnerships, some perspective news, some banking news, some OCC news, some FDICI news, and so on. Now, the first news we're going to be covering on tonight's live is why was the crypto market space dumping over the weekend and so on, which is the first one we're going to be covering. Before we go through that, let's go to the comment section first. Let's see what's happening there. And then straight to the first news. By the way, thank you so much. I could see essentially, JP, Cruz, everyone's essentially liking the live show. Thank you so much. Honestly, thank you so much to everybody who has already liked and essentially retweeted this live show from the CMF or anyone new. CMF members, if you haven't smashed the like buttons or the retweet buttons, smash the like buttons and the retweet buttons. If you're watching this on X, if you're watching this on YouTube, smash the like buttons and also drop a comment outside the live, whatever you want to go for it. Now, let's see what's happening in the comment section, then we go straight into the first news. Did you pass the Clarity Act for us, Miles? I didn't pass the Clarity Act for you, no. The Clarity Act is going to be discussed tomorrow, because today is the 16th. So 17th and 18th essentially is going to be the sit down for the Clarity Act, and according to the person in charge of it, we should have a Clarity Act going into 2026. Good evening, Miles and CMF. Nice to see you back, though. Good to see you, Zobolik Zobi. How you doing? Why some TikTokers saying XRP won't be used on stablecoins? Because XRP is not a stablecoin? Good evening, Miles and CMF. Manny, good to see you as well. How you doing? How you been? Now, first news. The crypto sell-off everyone's been experiencing essentially over the weekend. They're saying essentially the ties to the crypto sell-offs is the ties to the tech stocks not doing too well due to the whole AI situation of a bubble burst. So here it is. Market sell-offs deepens as essentially the Fed uncertainty and AI bubble fears trigger a $500 million in liquidations in the crypto space. The crypto market has grown increasingly essentially as a risk-averse, essentially aimed paranoia about potential US Federal Reserve changes in leadership, as well as tightened liquidity conditions and heightened fears of artificial intelligence bubbles bursting due to what Michael Saylor said. Cryptocurrencies, including Bitcoin and Ethereum, moved sharply lower as positions were forcibly liquidated essentially and sentiment deteriorated. Now, this crypto market sell-off seems to be a function of the overlap between macroeconomic uncertainties and changing views on monetary policies, and the pressure leveraged essentially future markets into that. Recent data indicates that crypto exchanges witnessed liquidations of around over $500 million in 24 hours, suggesting widespread de-risking among leveraged traders and adding essentially a brutal sell-off. Financial markets have essentially roiled by essentially fresh speculations about who will take over as the next chair of the Fed. That's also putting some pressure on the market space as well. But there shouldn't be any sort of pressure on the crypto market space because we know the person that's going to be chosen is definitely going to be pro-crypto because Trump is going to be choosing that person. The changing expectations on who will lead the Fed essentially raise uncertainty about riskier assets, including cryptocurrencies. The US dollar index was supported at the 98th level, following essentially a drag lower for weeks, with investors eyeing essentially a safer asset in the face of uncertainty in the future monetary policies going forward. The US government's extension of the debt ceiling, about $5 trillion, and technical reverse management operations by the Fed at the same time provided support for the short-term treasury and essentially also liquidity, although policymakers stressed that these would not return to large-scale quantitative easing in any sort of a way. These also have come as survey data in the US shows that consumer confidence is absolutely fading, with a decent chunk of Americans saying they expect to scale back essentially their spendings for the holidays because things are getting more expensive. This is essentially also encompassing macro uncertainty coupled with the defensive nature of positioning in treasuries led to a context in which crypto assets face liquidations in market essentially participants favored safer instruments. Throughout the sell-off situation we had over the weekend inside the crypto space, Bitcoin tested critical levels several times at around the mid $80,000 mark. Bitcoin price has revisited the $85,000 territory in a steep decline from its recent peaks. Ethereum was also down, falling to just $2,900. And according to on-chain and price data, sharp declines triggered forced liquidations totaling roughly $592 million in one session. As automatic stop-loss executions and margin calls essentially cascade through future markets, the price action also showed renowned essentially fragility to the largest cryptocurrencies after demonstrating strength in October and November. Leverage also essentially is likely magnifying the sell-off in the crypto market space. Futures open interest in cryptocurrencies remain very high, with high tens of billions of dollars worth of leveraged positions outstanding. When prices move against heavily leveraged long bets, exchanges essentially automatically shut such positions to safeguard lenders from suffering losses through forced liquidation. New figures also indicate that over $527 million worth of bulls leveraged positions have been liquidated within 24 hours, indicating a very rapid unwinding essentially of exposure and essentially buttressing the downside situation. These liquidations show that the leverage traders, especially those with little to no hedging, have seen their positions essentially decimated by a wider pullback and liquidity tightening. Apart from the monetary policy and liquidity, global risk sentiments was also influenced by increased skepticism about the AI technology boom bubble burst that essentially Michael Saylor said about a week back. Hedge fund titan Bridgewater Associates issued a public warning that exercises dependence on external capital for AI expansions had moved into a dangerous stage and likely to place markets in a bubble. So now it's not just Michael Saylor suggesting some sort of AI bubble burst might be on the way. The titan, essentially hedge fund titan Bridgewater Associates, is also backing that theory that we might be reaching some sort of dangerous levels of AI bubble burst. Now, to put it in perspective, Bridgewater essentially is a hedge fund, and I'm guessing the hedge fund has put all of its bets on Michael Saylor, for then essentially coming out and saying, yep, Michael Saylor is right, and we do think of AI bubble burst is on the way. In other words, suggesting that we know where their bets are on the market space. Greg Jensen, also the Bridgewater co-chief investment officer, pointed out that AI initiatives often require capital far beyond internal cash generation, creating uncertainty about the profitability and long-term valuations within the tech sector. These warnings added to the market fears as disappointing earnings estimates on the part of big tech firms, including O'Corral, showed that excessive AI infrastructure spending still wasn't essentially materializing into profit and deteriorating risk appetites in equity and crypto markets. The crypto market sell-off has been fueled by new leadership, essentially, as we talked about, regarding the situation of the Fed, which in my case, I don't see that as bad news. They're saying that there's some pressure on the crypto market space because we might be getting essentially, Jerome Powell is leaving, a new Fed member is going to be coming in. A new Fed member replacing Jerome Powell actually should be seen as something positive, because we know he's going to be pro-crypto. We know that he's going to be having the same vision or mindset as the essentially Trump administration or Trump himself. So that shouldn't be really a big fear. The only fears inside the market space, one, is an AI bubble burst that's putting pressure on tech stocks, which puts pressure on the crypto market space because Bitcoin follows tech stocks sometimes. Two, essentially, we also have the other situation inside the market space where there might be a war kicking off, apparently. I don't believe that's going to happen in any sort of a way. They're suggesting World War III again. A long time ago, about 2 years ago, they suggested World War III is on the verge of happening. Within a week, everybody should get ready. I don't believe that's going to be happening at all, because it just doesn't make sense, because we're in a different time, essentially, scale to back then compared to now. Everybody has nukes, everybody presses a button, everybody's dust. So the idea of going to war is just stupid. So I don't think they'll be that dumb enough to essentially pull that together. But they're definitely sure creating fear inside the market space. I mean, the UK suggested today that your daughters and sons should get ready for a war with Russia, apparently. The EU is also bribing, essentially putting fuel on the fire of, Russia's on the verge of attacking the EU and the United Kingdom. We need to be getting your daughters and sons ready for a war. All of that is putting pressure on essentially the market space, which was pressure on the crypto market space, which makes riskier assets even 10 times more riskier. And I know that people like Michael Saylor will come out and say Bitcoin is a risk-off asset and a digital gold. In reality, Bitcoin reacts like a risk-on asset in situations like this. So all of that isn't essentially adding, helping the crypto market space in any sort of way. The timing is all of it is very interesting. We're on the verge of a Clarity Act, which brings clarity towards the crypto space, so that the crypto space can move forward and decouple and go into utility. At the exact same time, they're suggesting World War III, and Michael Saylor is still betting on the AI bubble burst. All of that essentially put fear on the market space to tumble slightly downwards. There's a few other factors as well, but those ones played some major roles. Now, moving on, essentially from the situations that are going on inside the market space right now in the crypto space and the war scenarios, to a Bitcoin treasury company. Before we talk about the Bitcoin treasury company, let's go inside the comment section first. This was happening there, straight to the next news after that. Let's see where we're at. So we were here. Hi, Miles. Crypto Q, good to see you as well. How you doing? Morning, Miles and CMF. Shelly, good to see you as well. How you doing, Shelly? What up, Miles and CMF? Ray, good to see you as well. How you doing? Miles, every other day we hear that so many traders got liquidated and lost hundreds of millions of dollars. It's true. Where the hell do these traders get their money from? Well, it's not one person. It's a collective of traders. It could be millions of traders essentially investing at the same time. Even Miles and CMF, Jason, good to see you. How you doing? We are better off investing into some exchanges as they keep making so much money by liquidating traders. So it is all doom and gloom till middle of next year. Then no, I wouldn't say it's doom and gloom until the middle of next year. I would say first quarter is going to be actually quite good, excluding January, because January is good and bad. January's bad side is the whole Michael Saylor situation for not over diversifying his company. If Michael Saylor diversified his company and not just brought Bitcoin, JP Morgan wouldn't be going after it, and neither would BlackRock on a silent one. to be fairly honest. If Michael Saylor diversified at least into Ethereum from Bitcoin, or into XRP, or into AVAX, or into Solana, or whatever he may want to go into, none of this situation would have happened on essentially Michael Saylor's company strategy. JP Morgan couldn't care less about them, neither would BlackRock. They would care, but not as much as they're caring now, where they're trying to pressure and squeeze it out of its position, essentially, by trying to remove it from indices in January. Also, regarding the other situation, regarding essentially the Michael Saylor's, regarding January, the other bad side of January, is that there might be certain sell-offs, but it's not confirmed in any sort of review from Japanese market space, which could turn out essentially do an opposite reversal and be positive for the market space, which comes to the good of January. The good of January is that going to January, we could have our Clarity Act, which brings utility towards the table. Not overnight, but over time. But that's the good part of January. The bad part of January is Michael Saylor might be getting pressured. I'm just hoping that before Michael Saylor gets pressured, that we get a Clarity Act and essentially crypto projects start decoupling from Bitcoin's footsteps. XRP, XLM, XDC, HBAR, AVAX, Solana, Ethereum, all of them start decoupling from Bitcoin's footsteps with a Clarity Act before essentially the whole Michael Saylor situation happens with getting pressure by JP Morgan, essentially, because that will weigh in quite bad on the market space. That's the bad side. The good side is, you know, the Clarity Act passing through before we go into January. Now, greetings, Miles of CMF. Did you have a good holiday? Give us the tea. I did have a good fun vacation. I did. It was the first time I spent essentially, you know, a few days on the British countryside. Essentially, it was very nice, very peaceful, and I was in a hot tub pretty much every night. Obviously, going out in the daytime, middle of the day, and so on, and it went pitch black around essentially 4. Around 4, it looked like it was 11 o'clock at night. But beautiful, peaceful, and you know, one of the highlights, you know, being in the Cotswolds, you know, very nice place. Other highlight, essentially, going to Jeremy's, you know, essentially pub, amazing. Because I grew up watching essentially Top Gear and the Grand Tour. You should, there's some of the tea. You should, and also, you know, having a drink, barbecue, drinking, going out, restaurants, this and that. It was all fun, I'll be very honest. Very relaxing when you came back to the Airbnb, and then, you know, fun going out. You should add essentially CMF exchange to your chain of companies. I like that. I have something similar planned. Should I drink coffee instead? Let me get the coffee. I have water and coffee. That's the coffee. The other one was the water. We'll have something similar to that. CMF exchange. Even in Miles of CMF talking to see as well, how you doing? But brilliant idea. Kerry, brilliant idea. Now, Bitcoin. Treasury. So there's a lot of Bitcoin treasury companies out there, as we're talking about Michael Saylor and strategy and so on. And one of those, or some of those, are not doing too well and that are about to get kicked out of the NASDAQ. For example, Bitcoin Treasury Kindly MD faces potential delisting after the NASDAQ price notice. So, a Bitcoin treasury company that pretty much essentially sells shares to buy Bitcoin has received a NASDAQ notice after its shares traded below the exchange's $1 minimum bid price essentially for 30 consecutive business days, starting essentially a 6-month window to regain compliance or risk being delisted. This could potentially be the first essentially company to get delisted from the NASDAQ as a Bitcoin treasury company that wasn't able to sell shares. If the company fails to regain essentially compliance within the initial 180-day period, it may seek an additional extension by transferring essentially its listing to the NASDAQ capital markets, subject to meeting and other listing requirements, according essentially to the filing. NASDAQ could ultimately delist its shares if the company fails to satisfy the bid price rule or pressure essentially, or pursue available essentially remedies. Kindly MD, a Utah-based healthcare services provider, announced on May essentially 12 plans to merge the Nakatomi holdings, marking a shift towards a Bitcoin strategy. So far, since then, until now, it's not really worked out for them being a Bitcoin treasury company because nobody's buying their stock pretty much. Their stock trading under the ticker NACA has since fallen by more than 98% and was at essentially 39 cents a share at the time of writing. Nakatomo Holdings was founded in 2025 by Bitcoin Magazine's CEO David Bailey and is essentially structured as a Bitcoin native holding company, building a network of crypto treasury businesses in partnership with BTC, the parent company of Bitcoin Magazine and Bitcoin Conference. So these are some pretty damn big names. I mean, Bitcoin Magazine, the Bitcoin Conference, and David Bailey essentially being the CEO of Bitcoin Magazine, all being a part of this. Yet the company that essentially owns on the stock market, being a part of them, is about to get kicked out of the Nasdaq, and nobody wants to buy the shares. The sharp drop in Kindly MD's share price, which fell below $1 essentially in October, has been linked to the company's financing strategy, which relied essentially on selling discounted shares to private investors through the $563 million of private investments in public equities. Those PIPs, essentially deals, created sharp downward pressures when a large portion of the shares became eligible for resale in September. The surge in sell orders drove a steep, essentially, drop in the share price, CEO David Bailey told Forbes in October. Bailey also said that he plans to bring Bitcoin Magazine, the Bitcoin Conference, and the hedge fund to essentially 210K capital under Nakatomo Holdings as a part of the effort to strengthen the company's cash flow. Kindly MD still holds 5,398 Bitcoins, ranking it as the essentially 19th largest public company by Bitcoin Holdings. According to data essentially from BitcoinTreasury.net, back in August, the company said one of its goals was to essentially acquire 1 million Bitcoins. Unfortunately, that dream, that bubble, has been burst because they're about to get delisted from the Nasdaq. By comparison, essentially strategy, the first Bitcoin treasury company holds 671,286 Bitcoins. Although its stock MSTR is down over 40% year to date, it's still up 426% since the company began essentially its BTC buying spree in 2020. So, the first ever Bitcoin treasury company to possibly be dumped from the Nasdaq because nobody wants to buy their stock. And some big names are behind it, yet nobody wants to buy a Bitcoin public stock anymore. It's an interesting factor, to be fairly honest. Yet on the other side of the spectrum, XRP's been absolutely smashing it, 30 consecutive days of buying purchase in terms of the ETF. Now, moving on from that to the US non-farm payrolls, that is essentially the data that came in today. The US non-farm payroll essentially decreased by 105,000 essentially in October 2025. The data came in today. The first drop due to the delayed BLS reports. This contrasts with November's edition of 64,000 jobs, essentially reflecting a fluctuating employment landscape aimed at government shutdowns. The US non-farm payroll declined by 105,000 in October, and according to the Bureau of Labor Statistics December reports. The fall essentially in payrolls marks a notable change in the labor market space, raising questions about economic stability and potential impacts on US fiscal essentially policies. Now, the October essentially decrease in US non-farm payrolls signifies the first data release since the government shutdown essentially delay. The Bureau of Labor Statistics highlighted the drop in its December 16, 2025 report following revisions for the prior months. Despite the October decline also, November saw a positive adjustment with 64,000 essentially gain in payrolls. The BLS emphasized that the government's employment led the decline in October for 162,000 positions lost. What essentially they mean by that is if the Democrats, for crying out loud, voted essentially right at the beginning and we didn't have a government shutdown, a lot of people wouldn't have lost their jobs and this data wouldn't be as it is the way it came out today. Immediate concerns focuses on the economic impacts of these job losses, particularly in the federal employment. Market reactions have been stumped, essentially, without significant movements in cryptocurrencies or traditional financial assets. It was neither positive or negative, you could say. The US non-farm payrolls decreased, didn't really impact the crypto market space, didn't really have so much of an impact on the stock market either. The October decrease in the US non-farm payroll signifies the first date release, and since then, since essentially this data has came out today, so far, no impact whatsoever, which is the first time you could say, or the second time we've had no impact whatsoever from any sort of data essentially being released. Now, moving on from the US non-payrolls that had zero impact to Trump. So, apparently Trump is going to be doing a speech tomorrow, which is put some sort of a hype on the crypto market space, some hype on the stock side as well, on what is he going to say. Is he going to say something positive? Is he going to say something negative? Or is he just going to share his opinion? Or is he going to say something about tech stocks? Is he going to say something about the crypto space? Is it something about Australia because of what happened in Australia, which was very bad? And I do essentially feel sorry for what happened in Australia. It should never happen in the first place. Or is he going to say something else? Nobody knows, but it is bringing tension towards the crypto market space right now. So President Donald Trump has announced that essentially he will deliver an address to the nation tomorrow night, 9 p.m. Eastern Time, live from the White House. The announcement has already sparked speculation around essentially across the financial markets, especially in crypto. Analysts say the speech could act as a short-term catalyst, with essentially markets likely to react sharply depending on its tone and key topics. As traders prepare for the event, one question dominates essentially the entire conversation of what he might be possibly saying, which is, will the crypto space dump or pump after essentially Trump comes out and makes his speech? The crypto markets have been highly sensitive to macro and political signals, and Trump's words historically move sentiment fast. If the address includes any mentions of digital assets, regulations, or economic policies, the impact could be immediate, as in positive, depending on what he says. Despite recent turbulence, especially following the October crash, the broader crypto outlook remains bullish. While the second half of 2025 saw sharp corrections, many experts argue that this was more about essentially delving into the macro fear than weakening fundamentals, which is true, because we got so many things out of the way this year in terms of regulations and banks being on board, the OCC being on board, FDIC, the list goes on. We had so much positiveness inside the crypto space this year, but the price wasn't reflecting it. Looking ahead, 2026 is already being positioned as a breakout year due to essentially a Clarity Act essentially on the way, and also banks, not fearing the crypto market space anymore because of what the OCC said, and so on. Now, Foxtrot's essentially Tom Lee recently also reinforced the long-term confidence inside the crypto space, saying that while price levels remain uncertain, crypto fundamentals have never been stronger. Facts. According to Lee, the United States has begun moving towards more favorable crypto legislations, while Wall Street continues to show growing interest in building essentially products and infrastructure on blockchain technology. Lee also addressed skepticism around both Bitcoin and the AI trade, explaining that investors are struggling less with the technologies themselves and more with how much essentially future growth should be priced in today. There's essentially that uncertainty, he said, often leads to profit taking, but does not undermine the long-term opportunity situation. Lee also summarized it simply by saying, in crypto, the best years are essentially definitely ahead of us. Now, based on what essentially Lee said, and based on essentially what Trump could possibly say inside the crypto market space, Trump can definitely move the crypto market space. He can move the world market space if he wanted to be fairly honest. 1 second. Apparently, the mic is not working. Can everybody see me and hear me inside the comment section? Put thumbs up if you can hear me and see me. Comatose and Funky Brother are having problems with the mic. Can everybody else hear me and see me? If you can hear me and see me, put a thumbs up. Just so I know if it's my problem or is it an issue on YouTube. And while everyone's doing that, let me just answer the questions in the comment section. Let's see what's happening there. Didn't you stop drinking coffee like 3 years ago? I stopped and then started again. Good evening, Miles. Hope you had a great holiday. Good to see you, Ian. How you doing? Crackling. Yeah, everyone else can hear me and see me. Audio is crackling. Can you see? But can see you, but crackling. Okay. Everybody can see me and hear me. Yeah. Okay, so hopefully the crackling goes away because everybody can see me and hear me. Some can't, some can. The most can, some can't. Okay, I hope the audio goes away. The audio situation goes away. as we carry on. It's crackling again. Big crackling, but can see you okay. Okay. Okay, so I hope this situation resolves itself as we go along. If it doesn't, then I'm going to have some conversations with essentially Restream, see what's going on. Now, regarding essentially Trump's speech tomorrow, positive, negative, it's definitely going to have an impact on crypto market space. Just crackling. Okay. Also, maybe if I put the... Is it still crackling now? It's minor crackling for me. Okay. So it's slightly crackling, in other words. Not all the way. Okay. Hoping it's fixed now, because I pulled the volume down a little bit, so maybe my voice was coming out too loud. Hoping that fixed. And lost connection. And the connection is back. I don't know what happened there. Okay. Regarding Trump, good or bad news, definitely going to impact the crypto market space. Also, regarding what Lee essentially said, yes, a lot of positiveness has happened this year. Also, some negatives regarding the markets. We're back. Can everybody see me and hear me? Put a thumbs up if you see me and hear me. Okay, we are back. Yeah. Mouse have been abducted. I don't know what happened, I'll be honest. It restreamed, something came on the screen, it just said lost something, server something, and then it just cut out completely, and it tried to refresh itself into the live, couldn't. I refreshed the page, suddenly it worked. Okay, whatever it was, it's gone now, it's working, which is good. Now, where were we before all of this happened, essentially? FDIC is what we're going to talk about next on tonight's live. Scott, good to see you. How you doing? Susie, good to see you. How you doing? Good to see you. How you doing? Okay. Let's go back into the live. Now, the FDIC is what we'll talk about next on tonight's live. So the FDIC essentially has laid out some rules for banking in terms of stablecoin applications under the Genius Act. And so during today's board meeting, the FDIC counsel, Nicholas Simons, outlined essentially requirements for applicants regarding banks entering the crypto essentially space. We're pretty much borderline on that happening on a much more larger scale. So each filing must essentially list the subsidiary proposed stablecoin activities, describe its ownership and governance structure, and include an engagement letter with a registered public accounting firm. In sum, the proposed rule would allow the FDIC to evaluate the safety and soundness of proposed payment stablecoin activities while minimizing essentially the regulatory burden on the applicant. So if any essentially bank wants to use some sort of stablecoin activities, they have to mention which stablecoin activities, they have to mention which company might be behind a stablecoin, if there is one, and also what purposes, what they're going to be using it for, who's going to be storing it essentially for them, and so on. The acting FDIC chair, essentially Travis Hill, told lawmakers earlier this month that the agency would soon publish the Genius Act implementation framework, essentially. On Tuesday, essentially today, Hill also added that another proposal is planned in the coming months to set capital, liquidity essentially, and risk management rules for bank-linked stablecoin issuers. The agency also essentially stands regarding the FDIC in recent years, has revisited its use of risk and oversight, a step that could influence how banks interact with crypto companies and payment platforms. The Genius essentially framework provides a clearer essentially path for banks that want to issue or service stablecoins under the federal supervision. The Federal Deposit Insurance Corp has also taken its first major essentially step towards implementing the Genius Act, releasing essentially a detailed proposal on how regulated banks could apply to issue payment stablecoins through supervised subsidiaries. So we can possibly see these banks coming out essentially and saying, you can possibly, I just read essentially Funky Brothers comments, and don't lie, you went to the toilet, coffee is going. No, I'm not blaming anyone. There was a situation with Restream. But where was I? Regarding essentially the Genius Act, essentially, the framework from the FDIC regarding the FDIC essentially stating what the rules are going to be moving forward for banks that want to be involved inside the stablecoin sector, it's brilliant, honestly, that they're moving as fast as they possibly could, not waiting until next year to come up with some sort of essentially implementation rules, but they're coming up with the frameworks essentially suggesting to the banks, if you want to be involved inside the crypto sector, stablecoin sector, tell us who you're going to use as the backbone, and then we'll give you a green light. The draft rule essentially published in a 38-page document on the agency's essentially website sets approval standards that the banks must meet before offering stablecoin products inside essentially the federal banking system. The proposal also essentially enters a public consultation period, a mandatory stage before the FDIC can essentially advance to final essentially rulemaking. It marks the first regulatory framework from the federal banking agency since the Genius Act essentially became a law essentially in July, and signals the start of what may become the United States' primary model for bank-linked stablecoins. Under the draft rule, a bank would apply through a subsidiary with essentially FDIC, evaluating both the parent institution and the issuing essentially entity as well. Reviews would also cover reserve standards, operational controls, management quality, redemption, mechanics, and overall financial conditions as well. Once approved, the FDIC would supervise the subsidiary stablecoin activities. The proposed rule will also remain open for public comments before the FDIC essentially decides on modifications or advances to its final vote. These are the steps banks have to take to get involved inside the stablecoin sector, and now you know them also. Once complete, banks could also begin filing applications through subsidiaries, subject to ongoing supervision. Additional rulemaking, including capital and liquidity standards, will also follow. So these measures will determine how competitive federally supervised stablecoin issuers may be compared with entities operating essentially under state charters or offshore rules. With the Genius Act, now the law, essentially FDIC framework, is a key pivot point in the US stablecoin market space. The coming comment period will shape everything from issue obligations to how regulators essentially measure the operational risk and redemption practices and the dollar reserve oversight. These are the exact essentially links that essentially these are the exact steps banks have to take to get involved inside the stablecoin sector if they want to be involved inside the stablecoin sector, which essentially is applying for regarding letting the FDIC know by a filing who they're going to use as essentially in those stablecoins, who's going to be their subsidiary, where they're going to be essentially storing it, who's going to be the accounting firm behind it essentially, and what's essentially what the purpose is for them essentially going into this field. And also after that, it will be a public opening where people can give some sort of opinions. And then after that, it will be the final vote with the FDIC giving a green light. I don't see them giving a red light in any sort of a way. It's going to be a green light either way. I mean, just recently we had the OCC give it, some sort of a green light to Ripple, Circle, and essentially Paxos, if I'm not mistaken, some sort of a green light as well. Everybody's very pro-crypto, FDIC, OCC, SEC, CFTC, the list goes on. So it's definitely going to be a green light as well. But it's good to see that the FDIC is taking some steps. Now, SBI Holdings is what we're going to talk about next on tonight's live. SBI Holdings and Startail advance Japan's digital yen plans. SBI Holdings, a major financial group listed in Tokyo, has partnered with blockchain company Startail Group to develop a stablecoin backed by the Japanese yen. This project essentially aims to bring together strong financial experience and modern blockchain essential technology. The stablecoin is expected to launch in the second quarter of 2026. SBI Holdings is a key part of Japan's financial systems. It also operates across banking, security, and digital assets. Its size and regulatory experience make it well suited to lead a national stablecoin project. Starlade, essentially a group, on the other hand, contributes technical knowledge to blockchain essentially and Web3 systems. The company is also involved in building a Sony-backed Sonium network. This initiative essentially adds credibility to its technology background. The planned yen stablecoin will be designated to meet Japan's regulatory standards. It will also support domestic and international payments as well as settlements between institutions. As announced, Shinsei Trust and Banking, a unit of SBI Shinsei Bank, will manage this creation of the redemption essentially of the stablecoin. This will ensure that users can exchange the token for Japanese yen clearly and essentially reliably. SBI VC Trade, which is licensed to operate as a crypto asset services, will also help distribute and circulate the stablecoin. This structure places trusted and regulated companies at the center of the project, which is important for the market confidence. Meanwhile, Startail has also announced launching a US dollar stablecoin used for payments and rewards and liquidity on the Sonium network. Sony Network is going to be releasing a stablecoin, a US dollar stablecoin, Sony Network. The upcoming yen stablecoin will also work together with this essentially dollar token. Both currencies are essentially planned to support a new tokenized stock exchange that operates at essentially all hours. Both essentially will also essentially, with both yen and dollar peg stablecoins available, the platform can serve users in Japan and abroad. It also supports future use cases such as automated payments between software systems and distributions of digital investment products. SBI Holdings, a prior essential experience of stablecoins, the company has announced plans to introduce US dollar stablecoins and developed with Ripple to the Japanese markets in 2026. SBI Holdings regarding the Ripple essentially RLUS being pushed out in 2026 is amazing news. SBI Holdings also creating their own stablecoins. Why not? And also the Sony blockchain coming out with the US dollars as well. Why not? At the same time, Japan is actively supporting the growth of the yen-based stablecoin. Japan's essentially financial services agency, FSA, has also approved the JPYC as the country's first local yen stablecoin. Regulators are also backing a joint stablecoin project that involves major banks, including Minzu Bank, FUFG Bank, and also SMBC Bank. As Japan upgrades its financial systems, these moves essentially place the country in a strong position to lead the development of a regulated and trusted stablecoin sector. I'll be honest, the Japanese are definitely leading when it comes to regulations as well. Not so much when it comes to taxation of cryptocurrency, still a little bit high, but standard. But when it comes to essentially moving as fast as possibly any country could do, Japan does a pretty damn good job of that. So does Singapore, to be fairly honest, as well. Dubai, essentially UAE, does a very good job of that as well. Hong Kong moves, but sometimes they're restricted by what China has to say. Anyways, putting that to one side, that is brilliant news coming out of Japan regarding SBI essentially trade and essentially Ripple being pushed into 2026 in terms of RRUSD. Their own stablecoin also coming out as well, and Sony's digital dollar stablecoin as well. Now, and also SBI Holdings having some sort of a green light from the Japanese authorities of being their only essentially version of the yen. Brilliant news, because they're Ripple partner. Now, moving on essentially from SBI Holdings to the Federal Reserve. Before we talk about the Federal Reserve, let's go to the comment section first. This was happening there. Then we'll go straight into the next news. Hello, family. Scott, good to see you as well, brother. How you doing? Sorry, Miles, didn't intend to distract you. No problem, Funky. Evening, mate. Pure, good to see you as well. How you doing? Now, Federal Reserve, essentially 2026 projections indicate rate cuts. The Federal Reserve's latest dot plot projects essentially 25 essentially basis point rate cut in 2026, contradicting claims of no cuts, and sets a GDP growth essentially expectation of 2.5%. This projected economic essentially outlook implying a gradual easing policy suggesting supportive environments for cryptocurrencies. So we weren't expecting any sort of rate cuts to come out of the Fed, but we did get one towards the end of the year. They're expecting a lot more rate cuts to be coming out in 2026, mainly because Jerome Powell is going to be sacked, pretty much, or he just leaves by himself. Same thing Gary Gensler did, sacked or leave by himself. The Federal Reserve indicated a revised projection for 2026 rate policy, predicting 125 basis cut rate. Essentially, this adjustment challenges narratives suggesting that there would be no cuts for that year. The Federal Open Market Committee's report highlighted that GDP growth might reach approximately 2.5%, positioning monetary policies to remain essentially on a cautiously easing path. The Federal Reserve's decisions to include a rate cut in 2026 signals a tempered easing approach, and this shift also does suggest plans to support economic expansions while managing essentially inflationary pressures expected through the period. Market reactions also essentially were immediate, with Bitcoin briefly spiking to over $94,000 following the announcement, demonstrating optimism among investors. However, the excitement was short-lived as BTC retracted, essentially retraced, reflecting tempered confidence in sustained market growth and due to limited rate reductions. According to CoinMarketCap, Bitcoin currently trades at around $87,424.84. Obviously, at the time of this article, it could be fluctuating somewhere near that now. Also, research teams anticipate that the upcoming Federal Reserve rate adjustments will likely manifest essentially a progressive financial shift. This path could influence regulatory landscapes, prompting gradual essential adaptations among crypto asset technology adaptations also, and liquidity movements too. And the most simplest way to put that is we're expecting more rate cuts going into 2026. One, because Jerome Powell is either sacked or he's just going to leave his position. And two, whoever's chosen essentially to replace him is going to become pro-crypto. Guaranteed to be pro-crypto, knowing Trump and Trump's administration and everything else that Trump's done so far for the crypto space. So 2026 is actually going to be looking on the upside for the crypto space, because everybody that essentially sits in a higher position seat is pro-crypto going into 2026, obviously when his time comes to an end. SEC pro-crypto, essentially CFTC pro-crypto, FDIC pro-crypto, OCC pro-crypto, and now the Fed being pro-crypto as well, because Jerome Powell's decided goodbye or be kicked out of the building. So that is brilliant news in 2026 for us inside the crypto space, because all those high-profile seats are pro-crypto. Now, moving on from the Federal Reserve's projections and what's possibly to come in 2026 to Michael Saylor. Michael Saylor has responded to the age-old question, which is quantum computing will destroy Bitcoin's network, is what's been said for the longest time. And it's true, it will, and it can, if essentially Bitcoin doesn't get its act together regarding the Bitcoin nodes and developers and so on, not realizing essentially that quantum computing is an actual threat, mainly towards Bitcoin and Ethereum, rather to essentially to other cryptocurrencies, major ones. Nobody cares about the minor crypto projects because they're not, threat or no threat, they're not going to go anywhere anyways. The major crypto projects, Bitcoin and Ethereum, are essentially on the side of being actually threatened by quantum computing. However, Michael Saylor is essentially answering this age-old question and suggesting a different perspective, which is a perspective I said a while ago, but it's a very, very thin line, to be fairly honest. His perspective is that quantum computing could actually be used to advance blockchain technology, which is true, which is also something I said in the TikTok days I used to do this live show, which is quantum computing can actually, advance blockchain technology. But in the wrong hands, it could also destroy certain networks. So, as discussions resurface essentially about whether quantum computers could threaten Bitcoin's cryptographic security, Michael Saylor, one of the world's biggest Bitcoin bulls, has offered a clear response to the claims. Saylor's co-founder of Strategy essentially argued that quantum technologies would strengthen Bitcoin in the long run rather than weaken it, which is truth and not so much of a truth, because, it's a thin line. In the wrong hands, quantum computing is very, very dangerous. In the correct hands, it could be, it could bring so much innovation in the world. Saylor, in his assessment of the subject, used the phrase Bitcoin quantum leap, stating that quantum computers would not break Bitcoin, but rather make the system more resilient. I'm a bit doubtful on that one. According to Saylor, in a potential quantum era, network updates would be inevitable and active coins would be moved to new and more powerful addresses. And inaccessible or lost coins would remain permanently frozen, which is true, which I don't understand the statement he made about Bitcoin quantum leap, giving quantum essentially easing and quantum essentially computing a positive twist with Bitcoin quantum leap. Yet wallet addresses that have Bitcoin don't move them, they're frozen pretty much forever. And wallet addresses that do have Bitcoin and move it to new addresses still could be at risk of quantum computing. There's no positive twist in the wrong hands. He stated that as a result of this process, network security would increase while circulating supply would effectively decrease, and Bitcoin would become even stronger with this essentially dynamic. It's an interesting, theory he's coming out, with from his own head, which is essentially a lot of Bitcoin that's in the old addresses will be frozen, which will essentially decrease Bitcoin's essentially supply chain. Essentially, Bitcoin's 21 million supply would go even lower because so much Bitcoin will be lost forever. Yet there's the other worry that Bitcoin can increase also in terms of supply, which is something that was said by even BlackRock themselves when they first advertised Bitcoin ETFs. Essentially hybrid Bitcoin ETFs, they advertise them. At the bottom of their advertisement, BlackRock put in a very, very small print, "We can't guarantee the supply of Bitcoin will remain the same," which infuriated Bitcoin maxis at the time. But it is true. And it has happened. A long time ago, somebody was able to print more Bitcoin. Obviously, all that was removed from circulation, but it was possible. And it can be possible again. Nothing's guaranteed. And quantum computing could also destroy that factor about Bitcoin as well. There's a lot of risks with quantum and Bitcoin. Not so much more positives, but more risks. Grayscale analysts also say that quantum computers are capable of essentially breaking Bitcoin's cryptography, and is not expected to emerge before 2030, which is not that far away, to be fairly honest. And according to essentially Grayscale, although research into quantum risk and preparations for post-quantum cryptography will accelerate, these developments are not expected to have a significant impact on cryptocurrency pricings in the coming year. In other words, don't worry about quantum computing next year or so on, because we're still a bit far off. 2030 and so on onwards is where we're expecting quantum computing. But as we get closer to that deadline, obviously a lot of blockchains are preparing themselves for quantum computing. They're the one that can't really prepare themselves as Bitcoin. Everybody has to be on board, and getting 10,000 people on board is going to be an absolute nightmare. Now, moving on from that, but those are some truths that need to be said, some positive, some negative. 2, Crypto.com. And we do know for a fact why Michael Saylor is, putting this twist on quantum computing and calling it the Bitcoin quantum leap as a positive twist, because he's one of the biggest Bitcoin holders. Obviously, he's not going to be coming out saying anything negative about it, even though it might be the truth. Now, Crypto.com is what we're going to talk about next on tonight's slide. Crypto.com partners with DMCC to expand blockchain use in commodities markets. Brilliant news. The collaboration focuses on one of the most stubborn, essentially, bottlenecks in the global trade, the gap between a trade being agreed and it being fully settled. Distributed ledgers are essentially being examined as a way to compress that timeline and reduce essentially counterparty risk and improve transparency across commodity transactions. The scope is deliberately broad. Metals, energy, architectural, essentially products, and diamonds are all part of the evaluation, reflecting DMCC's role as a global hub rather than a single market operator. The aim is not speed alone, but consistency, creating shared records that reduce essentially disputes and manual essentially checks. A central question being tested is whether physical commodities can be represented digitally in a way that works for institutions. Tokenized real-world assets are being evaluated not as retail products, but as building blocks for settlements, collateral, and trade finance. This includes examining how custody would function, how liquidity could be supported, and how payments might move between participants using digital rails. Any potential listings would depend on regulatory approvals, underscoring the project is structured around essentially compliance rather than experimentation. What Crypto.com is bringing to the table is incredible news, to be honest. Technology alone is not the focus. Crypto.com is also working with the DMCC Crypto Center to address a separate bottleneck: institutional understanding. Many commodity firms remain unfamiliar with tokenized structures, even when the efficiency gains are clear. Planned initiatives include technological training workshops and developer-focused programs designed to help businesses evaluate whether blockchain fits into their operations. The emphasis is on practical capabilities rather than promotion. At the same time, Crypto.com is expanding into another layer of financial infrastructure with market data. Through a separate essential collaboration with the eShares and Signal markets, the company is helping develop a platform that blends macroeconomic indicators, asset markets, and corporate data into forecast-driven intelligence. The platform is designed to cover a wide spectrum from interest rates and inflation equities to commodities, digital assets, and earnings. Each partner essentially contributes a different component, combining research and modeling a platform access. Together, essentially, taken together, these initiatives reveal a broader repositioning. Crypto.com is essentially moving beyond being a venue essentially for trading towards becoming a part of the plumbing that supports markets themselves. Settlement, token issuance, and education, and data interpretation. Now, this is brilliant news also for Crow, Crypto.com's token. Not overnight, but over time, every footstep Crypto.com takes inside the financial sector and expands its footprint, it's better news essentially for Crow in the long term. The same way every footstep Ripple is able to take to expand XRP and RLUSD. Certain firms can do this inside the crypto space and certain projects can't. For DMCC, the partnership strengthens Dubai's ambition to serve as a bridge between traditional trade and digital finance. For the wider industry, it suggests that blockchain essentially next phase may be less visible to retail users, but far more consequential essentially for how global markets operate. And that's what I meant regarding Ripple can take footsteps other blockchains can't. Whereas other blockchains have to wait in line and be picked to be used and tested, Ripple doesn't have to stand on the sidelines and waiting to be picked. They could just take footsteps, applying for licensing, acquiring essentially companies, expanding the XRP ledger in that sort of way. Same thing essentially Crypto.com is able to do, being essentially a company and having their own token, Crow. Now, putting that to one side, but sticking on the topic of Ripple and XRP is what we're going to talk about next on tonight's live. Before we talk about that, let's go to the comment section first. Let's see what's happening there, and then straight into the next news. We were here. Howdy, everyone. Thompson, good to see you as well. How you doing? How you been? I just realized that there may not be a bull run because regulations are being established in the legal perspective. Furthermore, it is a hyper-extended accumulation period. I agree, but according to Scott, the person in charge essentially of the Clarity Act, his words, end of the year, going to 2026, we have a Clarity Act. Hoping that there's no situations where certain people, Senator Elizabeth Warren, will try to go against it. Now, going into the Ripple news, but I agree, yeah. Ripple CEO confirms 30 straight days of XRP ETF inflows. That is incredible news. It does really show that in times like this, when the market is on a downtrend, Bitcoin's down, Ethereum's down, XRP's down, XLM is down, XDC's down, HBO's down, Solana's down, everything is down. Everything that matters is down. And it has been down just for the past few days. Slightly ever so up today, but mostly it's been down the past few days. Yet, during this time, we've had 30 consecutive days of inflows for XRP ETFs. That's impressive. You know why? Because Bitcoin didn't have 30 consecutive days of essentially ETF inflows during this time. Neither did Ethereum, neither did Solana, and neither did essentially Chainlink's ETPs, to be fairly honest. So that is quite impressive. Now you might be wondering to yourself, well, the price hasn't moved. XRP is down. Yes, because essentially the amount that's going out to the amount that's coming in is not going to be adding up for XRP's price to jump. But what it does show is that high-profile investors are interested. While people essentially are panic selling on the other side of the spectrum, from the retail section, or creating fear with hedge funds creating fear inside the crypto space because they tend to do that. On the other side of the spectrum, you could see a transfer of wealth happening from retail to high-profile investors through ETFs. Because that should tell you everything you need to know. When you're in a downtrend like this, when you're in some sort of manipulation sector inside the crypto space right now, some may call it a bear market if they want to, but trust me, bear markets are when Bitcoin hits down pretty damn low. And the rest of the crypto space has been hit with a massive blow. Altcoins have essentially, been hit with a massive blow compared to Bitcoin, essentially. But an actual bear market, Bitcoin will be much more further down. Yet the altcoins did essentially look like it was going through a bear market, but they weren't up to a certain extent. It was just pure manipulation of what's been going on. And also going through a 45-day government shutdown didn't really help either one of these situations. Yet, during all this time, 30 days of consecutive essentially inflows is amazing news. It's everything you need to know for you to feel confident holding XRP. If you weren't confident in any sort of a way of holding XRP, knowing what's going to come next, well, 30 consecutive days of ETF inflows from high-profile investors in the XRP should tell you everything you need to know during these downtrend essential periods where Bitcoin and Ethereum couldn't do the same. XRP continues to trade lower despite strong institutional inflows. The token trades near essentially $1.93 at the time of writing, reflecting a 7.1% decline over the past essentially 7 days, and a 13.4% essentially drop over the last 30 days. Over a 3-month essential window, XRP has fallen 36.7%, essentially mirroring a pressure across the broader crypto markets. Yet beneath essentially that price trend, capital flows tell a very different story. Why does demand keep rising while the price keeps on falling? Ripple's CEO, Brad Garlinghouse, drew attention to this divergence on social media. He confirmed that the US spot XRP exchange traded funds, ETFs, have essentially recorded 30 straight days of net inflows. The statement arrived as data showed that XRP ETFs continuing to attract capital, while larger crypto funds moved in the opposite direction. Brad also comments essentially placed the spotlight squarely on ETF behavior rather than price performance. US spot XRP ETFs surpassed $1 billion in essentially inflows, according to essentially data from Social Value. The milestone came just weeks after the first spot XRP ETF began trading on November 13th on Monday. On Monday alone, the products attracted $10.89 million in net inflows, with essentially funds from Canary, Grayscale, and Franklin Templeton all reporting fresh capital. Those daily inflows lifted essentially totals to roughly $1 billion, while the total net asset climbed to about $1.18 billion. Source, again, Social Value. Market participants noted that the significance of the pace. Kronos Research CIO Vincent Lee also essentially said the milestone reflected growing institutional appetite for regulated exposure beyond Bitcoin and Ethereum. Before essentially we took a little break from the live shows because I went on a family vacation and I'm back, the last thing I said to everybody about 5 days ago was essentially that there's a shift happening where essentially from Bitcoin and Ethereum ETFs, money is being essentially taken out and put into XRP ETFs. Some people might have laughed at that, some people might have thought that's not true, and some people essentially would accept that because they know that the XRP ledger brings a lot more towards the table in the long run than Ethereum and Bitcoin would. Fast forward 5 days to today, essentially, seeing the research, seeing the essentially sources, the data that's all coming out, where XRP ETFs are still getting consecutive days of inflows, while Bitcoin and Ethereum ETFs are struggling to have consecutive inflows, it does tell you everything you need to know. He pointed to improving regulatory clarity and differentiating narratives as drivers of early positioning, even as macro conditions remain cautious. The XRP ETF's essentially inflow streak stands out against the broader ETF landscape. Spot Bitcoin ETFs reported $357.7 million in net outflows, essentially on Monday, marking their largest single-day exit in earlier month. While Bitcoin was having a massive outflow, on the same day, XRP had an inflow of ETFs. Also, essentially, the Fidelity FBTC led declines with $230.1 million in outflows, followed by losses from Bitwise's essentially BITB and funds managed essentially by Grayscale's ARK, essentially 21 shares and Van Eck. Now, you got to picture it like this. Crypto market space is in some sort of fear stages right now. AI bubble burst on the way. World War III scenarios are brewing up again. So many things are happening that could all put a lot of pressure on crypto market space and make riskier assets even more riskier. Yet, investors are still coming for XRP ETFs. 30 consecutive days is very impressive in times like this. Yet, Bitcoin essentially is shown as the savior of the day. Bitcoin is shown as the golden goose, the digital gold, the risk-off asset, the risk haven, essentially the haven asset, essentially in that scenario as well. Yet XRP is the one bringing XRP ETF is essentially the one that's bringing the inflows, while Bitcoin ETFs are having outflows. But if you ask somebody like Michael Saylor, he would say, no, everybody's going for Bitcoin ETFs because that's the risk-off asset in macro conditions. In World War scenarios, in any scenario, Bitcoin is the risk-off asset, but the inflows don't show that. Because, as I said, with everything going on, AI bubble burst, World War III scenarios, and some other scenarios that are going on around the world, all putting pressure on some tech stocks, stock market, and then the crypto market space, investors that are going for XRP ETFs couldn't care less. But it also does show you that XRP is a much more safer asset compared to Bitcoin is. Because if Bitcoin is having outflows in ETFs, XRP is having inflows in ETFs on the same days. In conditions like this, honestly, it should tell you everything you need to know of which asset is better in times like this or any time, essentially. Spot Ether ETFs also followed a similar path. These products recorded essentially $224.8 million in net outflows, the essentially largest daily withdrawal since essentially November 20th. Bitcoin's price reflected the pressure from all these ETF outflows. Lee also attributed the moves essentially to renowned macro uncertainty. He cited cautious interest rate expectations, unwinding leverage, and thinning year-end liquidity as factors driving rotation into safer assets. In Lee's own words, essentially, the things that are going on right now, he's citing caution interest rate expectations, the fear of interest rate essentially expectations, the unwinding of leverage essentially scenarios, and the thinning year of liquidity. Yet, high-profile investors are still going for XRP ETFs, not going for Bitcoin ETFs or Ethereum ETFs. In fact, they're having outflows compared to essentially inflows. It should genuinely tell you which one's the better asset. Data essentially, and XRP essentially, and regarding that matter, in that environment of heightened tension, expectations, rate cuts, data forms, everything that's going on, in that environment, Bitcoin and Ether acted as liquidity exits, while as XRP didn't. Data through the mid-December shows US-listed spot XRP ETFs has attracted capital every trading day since the launch. That's bloody impressive. As of December 12th, the net inflows reached roughly $975 million, with no single session posting net redemptions. That interpreted essentially streak separates XRP's product from more established crypto ETFs, which saw stop-start flows tied closely to macro headlines. Not a single headline impacted people purchasing XRP ETFs. Every headline we've had so far in the past 30 days, World War III scenarios, AI bubble burst scenarios, macro condition scenarios, war scenarios of Ukraine brewing up, Middle Eastern wars brewing up, any scenario that could have possibly popped out in the last 30 days didn't stop people from buying XRP ETFs. High profile investors, it didn't stop them from buying XRP ETFs. But it did make people sell their Bitcoin ETFs and sell their Ethereum ETFs and have outflows. But in the same period, everybody was going for XRP ETFs. Regarding that interpreted streak separates XRP's product from more established crypto ETFs, which saw essentially stop-start scenarios regarding every headline that came possibly through. The consistency suggests a different use case. Analysts note that investors appear essentially to treat XRP ETFs as a structural allocation rather than a tactical trading tool. In other words, they see long-term potential XRP, not so much for the other two. While Bitcoin ETFs often reflect short-term shifts in risk appetite, XRP funds seem to draw interest based on asset-specific considerations. The flow profile highlights a broader shift within the crypto ETF markets. Investors no longer concentrate on exposure solely on Bitcoin and Ethereum. Instead, they are increasingly essentially distributing capital across alternative assets tied to payments, settlements, and infrastructure use cases, XRP. Spot Solana's ETFs also offer a useful comparison. These products recorded $35.2 million in net inflows, lifting essentially inflows to $711.3 million since their October launch, with smaller than Bitcoin and Ethereum products. But both Solana and XRP ETFs continue to track steady capital during volatile conditions. However, XRP was the only one that had 30 days of non-stop purchase. Honestly, if you even had a second, essentially, if you even had the second thought of, is XRP really worth it? Does it really have a future at all? Well, this should tell you it effing does. Putting aside the contracts, the licensing, the bank charter license, the internationalness of Ripple itself, of SBI Ripple, or essentially acquisitions is made of buying British companies, American, essentially having the first ever essentially Singaporean license for any sort of blockchain, or everything it's done, putting all that to one side, the partnerships, the license, the contracts, the acquisitions. This is just another confirmation of high-profile investors see something in XRP that they can't see in Bitcoin and Ethereum. That's why Bitcoin and Ethereum during hard times have outflows in terms of their ETFs, whereas XRP has inflows. Facts are facts. Now, people could watch this right now and say, no, Bitcoin is better or Ethereum is better, XRP is crap. But the facts do suggest otherwise. In hard times, even though Bitcoin is seen as the golden goose, the golden egg, the risk-off asset, the digital gold, it doesn't react like one. And the investors are starting to smell the BS when it comes for Bitcoin. Not saying there will ever be any sort of influence of Bitcoin, because there will be. But in hard times, that is seen as the golden goose because it has the image of the golden goose. The reality is the golden goose is actually XRP, because the facts and the numbers and the data suggest that. While the narrative may suggest Bitcoin is the golden goose, the facts and the data suggest otherwise. Also, regarding essentially Ripple's banking passport, which is essentially Ripple applying for that bank charter license, expanding the XRP ledger, expanding XRP and RLUSD. Again, Ripple's one of the only blockchains out there can do this, essentially. They don't have to wait on the sidelines to be picked by essentially organizations to be tested on. Ripple can actually take footsteps by acquiring companies, applying for licenses, and expanding the XRP ledger, which certain blockchains cannot, or most blockchains cannot. So, regarding that, Ripple's bid for the Federal Reserve master account, wrapped essentially inside its broader push for a US national trust essentially bank charter, isn't just a regulatory essentially signaling. It represents a potential transformative juncture in how digital assets integrate with core financial plumbing. Such access could also redefine RLUSD's credibility, reshape settlement ecosystems, and indirectly influence XRP's utility and institutional appeal. Everybody knows Ripple has applied for that bank charter license and a Fed account, such Fed master account. The charter receives some sort of a green light. The Fed account essentially is what we're waiting for. Now, here is a deep dive on that scenario. Here's a deep dive essentially into what that essentially means technically, economically, and competitively. In traditional US banking, a master account at essentially a Federal Reserve level is the gateway to the nation's central payment systems, including FedWire and FedNow, and serves as the account through which banks settle funds essentially with each other and the central banks. Essentially only federally chartered banks can certain essentially financial institutions currently can hold these accounts. They enable real-time settlements, direct custody of reserve balances and across the central bank infrastructure that underpins US payments. For a crypto firm to obtain such access, especially one that issues a stablecoin, is unprecedented. Ripple has strategically essentially pursued not just the master account, but also a US national, essentially US chartered bank through the the OCC. It essentially received a conditional approval in December. Essentially, yesterday, the day before, Ripple received a conditional essentially approval from the OCC, which again shows the OCC doesn't care about the banks anymore and is solely focused on expanding and bringing innovation by giving that conditional approval to Ripple to move forward. A conditional approval means that the OCC has granted essentially primary permission for the company, Ripple, to form or convert into a national trust bank, subject to specific requirements being met before it essentially can begin a full operation. Otherwise, Ripple can start transforming from Ripple to Ripple Bank now. Even before a full master account is granted, the Federal Reserve has been exploring a skinny master account. The concept, a limited access model for non-banks that could give fintechs and stablecoin issuers direct connectivity to the Fed payment infrastructure without a full bank privilege. This version could grant Ripple a direct settlement on the Fed payment system, reduce resilience on banking, essentially on bank correspondence, and faster, cheaper redemption cycles. In the most simplest way to put it, essentially, Ripple doesn't have to rely on the banks essentially accepting it into the financial sector because Ripple is the bank. With some traditional banking privileges like discounts on window access or interest on reserves, it still materially essentially improves RLUSD's operational profile because RL essentially tethers, for example, token USDT wouldn't have the same recognition essentially that Ripple's RLUSD essentially have inside the market space. Circle received a conditional essentially approval as well. USDC could get that as well, which I said a long time ago. American stablecoins will do the best. Alternatives to US essentially stablecoin that isn't a US-based company is just never going to be accepted. It's just never going to be possible. Ripple executives confirmed that this idea as a game changer, especially for bypassing costly and slow intermediaries. Although XRP is technically separate from RLUSD, the master account push carries ecosystem-wide implementations. A Ripple entity with Fed connectivity weakens a major essentially institutional barrier, regulatory uncertainty. This may essentially make counterparties more comfortable using XRP as a bridge currency for on-chain settlement. In other words, Ripple gets the Fed master account. There's no more excuses for any organization, any institution, any bank to fear using blockchain. Most importantly, the XRP ledger, because the rest of the blockchains wouldn't have the regulatory clarity that the XRP ledger will have. When Ripple becomes a full-fledged bank with access to the Fed accounts, through Skinny or not through Skinny essentially, when it has that capability, it puts the XRP ledger here and the entire crypto essentially sector here. In terms of credibility, in terms of institutions being comfortable using that blockchain in a regulatory environment, the XRP ledger instantly goes here, everybody else pretty much goes here. A Ripple entity with a Fed connectivity weakens that major institutional barrier, which is regulatory uncertainty. This may essentially make counterparties more comfortable using XRP as a bridge currency for on-chain settlements, funding liquidity pools, or offering institutional services. With direct settlement infrastructure, the XRP ledger payment flows could essentially more seamlessly settle into traditional rails. For example, converting XRP to USD at scale without bank correspondence, because Ripple is the bank. It's not relying on the banks anymore. It is the bank. If USD secures primary regulatory status, XRP could benefit indirectly as Ripple's broader ecosystem becomes more trusted by banks and corporations. Historically, public and institutional demand for one asset in an ecosystem tends to elevate others in that stack. And it goes back to what me and my banker friend were discussing, which again, I won't be mentioning which bank essentially he works for or which essentially, what position he holds inside that bank. However, it does go back to the conversation me and him had about a week ago, which was there could only be one clear winner inside of this whole AI bubble burst scenario, because all AI projects tend to do the same thing. They do the exact same thing. ChatGPT, essentially ChatGPT, Grok, the rest of essentially Chinese AI platforms or Gemini, they all bring the exact same thing to the table. Generating images, generating text, paragraph, courseworks, documents, whatever. They all do the exact same thing. So there can only be one clear winner. We can't have 10 AI models doing the exact same thing. Same scenario goes for the crypto sector, as essentially me and my banker friend were discussing, where he essentially said to me, the same way I see that happening is the same way I see this happening, where inside the crypto sector, there can only be one clear winner. Others will exist alongside it, but there can only be one clear winner. And you can clearly see who that one clear winner is going to be. Hence why XRP ETFs have had 30 consecutive days of inflows, whereas in the same period of time, Bitcoin ETFs, essentially, and Ethereum ETFs will be having outflows. In the same conditions, uncertainties of AI bubble burst, tech stocks not doing too well, China tariff situations, World War III situations, with all of that going on, the golden goose narrative of Bitcoin is the king is dying out and is fading away because the numbers do suggest otherwise. And high-profile investors are starting to realize that, hence why this is having 30 consecutive days of inflows. Now, the broader ecosystem essentially becomes more trusted by banks and corporations. Historically, public and institutional demand for one asset in an ecosystem tends to elevate others in that step. Ripple pursuing a Fed master account, either full or skinny, stands as one of the most essentially consequential institutional integrations essentially in crypto to date. Why does that matter? It embeds USD more directly into the US financial plumbing, reducing risk and increasing essentially throughput. It signals a regulatory acknowledgement of blockchain utility within systematic finance. It also elevates XRP's ecosystem by association, essentially, with a compliant high trust settlement framework. When fully realized, Ripple might essentially not just bridge blockchain with legacy finance, which has always been the narrative that Ripple will be the bridge of this essentially entire finance. It could also redefine how digital assets operate inside regulated money systems. In other words, Ripple went from the narrative of bridging finance to becoming the backbone. Look, if you even had for a second a thought in your head about XRP in terms of price action, in terms of XRP is not going anywhere, we're so far off, am I doing the right thing, am I holding essentially enough, or am I not holding enough, or should I sell off some of my assets? High profile investors are buying in times when people are having second thoughts about certain assets. You shouldn't be having second thoughts of high profile investors buying. Putting everything to one side, regarding their licenses, their acquisitions, their partnerships, their contracts, everything they've done so far. But yet also in the same time period where we're having uncertainties, AI bubble burst scenarios, tariff situations with China, World War III situations, Ukraine and Russia situation still going on, in that same time period, outflows, Bitcoin, Ethereum ETFs, inflows, XRP ETFs. It should tell you everything you need to know, that investors are starting to see the real potential inside the blockchain sector. There can always only be one clear winner when it comes to the financial sector. XRP has an ETF. Bitcoin has an ETF. Solana has an ETF. Ethereum has an ETF. Who's getting 30 days of consecutive inflows? XRP. It should tell you everything you need to know. On that note of people are starting to realize who the real king is and who the real golden goose is, we have come to the endings of tonight's live. If you're watching this for the first time ever, this is called the CMF Live. It stands for Crypto Mouse Family. My name is Miles, and this was episode 419 of the CMF Live show. On this live show, we talk about the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations, essentially. You can tune to this live show Monday to Friday, 10 p.m. London time onwards. And the next episode will be tomorrow. Episode 420 is going to be tomorrow, 10 p.m. London time. Also, the disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. If you want to check out any of the data that we went through on tonight's live, all the data is from So Value. Now, before we do go, obviously, let's go inside the comment section first. Let's see what's happening there. Before we do call it a night, essentially. In addition, institutions are buying in this particular asset class. Has Japan sold off the US bonds yet, Miles? Not so much. And they're going to be selling off little by little so it doesn't upset the market space. To be honest, I really think a parabolic move could be happening 2026 is where it's going to be headed, I'd say. What are your thoughts on Polygon's ecosystem? Polygon's ecosystem is okay, I would say. Not much major news around it, not major, essentially, licensings or agreements. The biggest one I had so far was the India one, but then again, India is, the Central Bank of India is very no to crypto, and then the government wants to bring some sort of innovation in. So there's a bit of a, tug and pull situation going on there, but nothing majorly about it so far. That would just break headlines, I would say. Let's go XRP, XLM, XDC, and HBOT. Let's go Scott. Let's go Thompson, XRP, absolutely. How will the reverse carry affect the crypto markets? Well, it's doing so well. It's doing well so far, I would say. Is there a start of decoupling? XRP, XLM, XDC, HBOT, VeChain, Algorand has so many partnerships. However, Bitcoin has what? Is this facts? Honestly, is this the start of a decoupling from Bitcoin with the inflow data? I would say it shows signs of decoupling, definitely. Miles and CMF, good evening. Good to see you, Davey. How you doing? That would be the starting of the meme coins death, pretty much. XRP number one. Let's go. XRP, XLM, XDC, HBOT. Let's go. I'm sorry if you already answered this, but if 30 days of inflows, why is XRP's price so low still? Good question, Ronnie, and I did answer, but I answered again. Regarding the XRP inflows that are happening into the XRP ETFs, but yet the price action is not showing it because the amount of ETFs, the amount of money that's coming in through the ETFs doesn't outweigh the outflows that's been happening from the retail section on essentially on terms of crypto exchanges, people selling their XRP on crypto exchanges. The comparableness essentially of the inflows coming in can't outweigh it, but it does show a wealth, essentially a transfer for happening from retail to high-profile investors. ETFs, high-profile investors are buying XRP ETFs, while the retail section is outflowing essentially in terms of XRP itself on the crypto exchanges or even hedge funds, adding some manipulation factor to it. And it goes for the rest of crypto space as well. Everybody's been experiencing some sort of downtrend, but on the silent note, we're seeing essentially a wealth transfer happening from retail XRP to institutional, essentially, high-profile investors in terms of the ETFs coming in. That's why you don't see price action, because inflows coming in for ETFs and outflows happening in terms of the markets. Now, so good to have you back with your words of wisdom. Have a great night, Miles, and see you tomorrow, same night. Artistic, let's go. See you tomorrow, same time as usual as well. Thanks, Miles. Great to have you back. See you tomorrow, CMF. Let's go. Shall I see you tomorrow, same time as usual. Outstanding. Take care, Miles and CMF. Let's go, Ray. See you tomorrow, but at the same time as usual. Thank you, Miles. Good night, everyone. Let's go, Stormy. See you tomorrow, same time as usual as well. Great to have you back, Miles. Have a great night and see you tomorrow. Let's go, Mike. See you tomorrow, but at the same time as usual. Good night, Miles, and thank you once again for a lovely, informative evening. Let's go, Funky. See you tomorrow, same time as usual. Thank you for the golden news, Miles. Have a lovely night all. Let's go, Lena. See you tomorrow, same time as usual. See you tomorrow night. Let's go, Funky. Good night, Miles and CMF. Great show and news. See you tomorrow, Free Forever. Let's go. See you tomorrow, same time as usual as well. Honestly, thank you so much to everybody who smashed the like buttons and the retweet buttons. If you didn't, CMF members, smash the like buttons, smash the retweet buttons. If you're watching this on X, if you're watching this on YouTube, just drop a like as well. Put comments outside the live as well. And also, if you haven't checked out, essentially a part of CoinMove.one, my own company, essentially, go and check out CMO, essentially construction is being launched. CMO construction based only in London. Essentially, we do construction projects and we accept essentially payments on the XRP ledger. We accept crypto payments, and we offer a 1-year warranty on any builds that we do, essentially through my own company. Other services will be coming out of CoinMove as well. A lot more services. One by one, they're going to be coming out. But if you haven't checked it out, go and check out essentially CoinMove CoinMove underline essentially is the @ on X. Check it out if you haven't already. And check out CoinMove CMO Essential Construction on Facebook essential pages as well, on business accounts. Soon we'll blast off. Good night. Let's go, Davey. Let's go. Thanks for the miles, and you're the best. Let's go, Comatose. See you tomorrow, same time as you. Night, Miles and family. Susie, let's go. See you tomorrow, same time as usual. Okay, thanks for answering my question. You legend. Have a good evening. Let's go, Roddy. See you tomorrow, same time as usual. Good night, Miles and family. Great live. Many thanks. See you tomorrow. Let's go, Ian. See you tomorrow, same time as usual. Good night, Scott. Good night, Miles. Tony. See you tomorrow, same time as usual. Good night, Miles. Hope you had an enjoying trip. I did. Let's go, Scott. See you tomorrow, same time as usual. Good night, family. Let's go, Scott. I will see everybody tomorrow, same timing as usual. Everybody have a great day or a good night, depending on where you're around, essentially around the world, CMF members. See you all tomorrow, same timing as usual. And have a good day or night. See everybody tomorrow, same time as usual.